Good morning, I'm Ben Major of Finextra here at the SAP Financial Services Forum in London. And this morning I'm going to be talking a little bit about fintech startups and their relationship with larger financial institutions. Joining me is Mike Laven from Currencycloud. Good morning, Mike.
Good morning.
Now, what is the future for new fintech entrants? Are they going to disrupt the traditional financial services, or are they going to be part of a new collaborative approach?
So the answer is probably both. Is that there's a tremendous amount of investment going in right now to disaggregate the bank. In other words, to look at whether it's lending or domestic payments or international payments or fast payments or trade finance, and in pure internet fashion, the startups take one very small service, optimize it like crazy, make it available via technology, and then either sell it directly to consumers, or because we're doing it better, cheaper, and smarter than the bank, try to integrate it back into the bank. So I think what you'll see is a tremendous mushrooming of startups as the banking offering becomes more digital. Then there's more opportunity to take those services and optimize them. So what's the smart bank to do? It can sit there and wait and hope that all of these bright guys with all of these smart ideas go away, or else can then try to figure out a way to cooperate with them. Our fundamental belief is that and not each bank will approach it the same way. Some banks will certainly believe that they're a fortress, what they have is the right thing, there's no reason to cooperate with anybody, we'll go it alone. We think that that's a losing proposition. I think the smarter banks will figure out how to cooperate with smaller companies like ourselves. One of the things that the startup world is particularly good at, and which banks traditionally are not very good at, is understanding what a customer looks like and tailoring our services so they're really customer driven. So if you look at whether it's loans or, in our case, global payments, we sort of get what the customer wants, we understand how the customer needs, and those are customers who come from an attitude from all of the rest of their experience with the internet that they want their service personalized. They want what they want when they want it, as opposed to what the bank has when it wants to give it to them. We're very, very good at that. We think ultimately there'll be a lot of cooperation between startups, and those startups grow after a while, who are very good at interfacing with customers, and banks who are very good at providing infrastructure and services behind that.
And why do you think banks need to look outside to build these new innovations? Why can't they do it themselves?
Yeah, so listen, there's in the startup world, there's a series of people who are bank haters, and they sit and try to wish the world of banking away. And the banks have four, to my mind anyways, four usual objections of why they can't be innovative. The first is that they have a lot of legacy systems, so there's been a massive investment in systems that are hard to change. The second is banks are very heavily regulated, which means any change is very difficult. The next is that there's a lot of data, sort of data privacy issues, really protection of customer data. And the fourth is banks are often quite siloed. In the international payments world that we're in, you have to touch both a cash management group, an FX group, and usually a corporate accounts group to get anything done. All that creates tremendous inertia to make anything happen. So it's not that, and also because the banks have to take all of those issues, at least in our payments world, their costs are high. So as the costs are high, the fees are high. So you have high costs, high fees, and a lot of complexity. That provides a real inertia on having to do something. I think what banks need to worry about is not necessarily our startups per se, but is other banks being smarter than they are. Others, if a really smart bank figures out a way to do a relationship with us or a payments firm or a trade finance firm that has a better customer sense, a better workflow, a cheaper product, that's going to put one other bank at a disadvantage. So it'll be the usual survival of the fittest, and some banks will be smarter than others, and I think that's what the issue is.
Do you think there's going to be a danger for these new startups, with these kind of arrangements? Because, if they get into bed with possibly the wrong bank, what could happen?
Well, getting into bed with banks is always a problem anyway, no matter how you want to do it. Listen, there's always a disequilibrium in terms of flexibility and power and innovation between a large, global, multi-billion-dollar institution who's needs to really protect both its employees and its customers, and someone who's based on innovation. So that this equilibrium is always very, very hard to manage. I think the way that one needs to think about it is all about customer focus. Is if the banks themselves can enable sort of flexibility towards the customer, then the back office and the processing can stay actually quite institutional within the bank. So yes, there's always going to be a problem with this equilibrium in the startup world. Do you lose your culture? Do you lose your flexibility? Do you lose your ability to move quickly and to reconsider? And that'll always be a problem for startups. But we have to I suppose we have to fly close to the fire, because if the world financial institutions are going to be there in the long term, and they will be there in the long term, and control the flows and control the customers, ultimately to serve all of those customers with better pricing and better service, you've got to figure out a way to deal with the banks, maintain your flexibility, maintain your integrity, and maintain your culture.